January report is a significant report of the year simply because it always includes a quarterly stocks report. Now, that used to be reported at the end of January, and they've incorporated it into the mid-month report over the last few years. So not only does it give us the quarterly stocks to tell us where we are with what's on hands, it also gives us the final production number for the previous crop, which that's what it did today. The most notable thing for the corn would be the production number, and actually it was fairly benign as well. The corn production number came in at 15.115 billion bushels, which was just 46 million bushels ahead of what the average trade guess was. But we actually increased the harvested acres of corn somewhat. Now that could be balanced off a little bit by some of the South American numbers. South America has been in the news for several weeks now with dry weather in the southern regions of Brazil and Argentina. And the Argentine corn number was actually reported at 54 million metric tons. That's a 500,000 metric tons under what the average trade guess had it. And Brazil at 115 million metric tons, which was 1.5 million metric tons less than what the average trade guess expected. All in all, world carryouts at 303 million metric tons, about 30 million bushels less than what the average trade guess was. And that's not a great big number. So all in all, maybe a benign report in corn. The way the market reacted in soybeans after the report came out, it turned out to be rather benign in the end. Initially, we were a little bit lower, but when you dig into the report, you'll find that even though the U.S. quarterly stocks were at 3.14 million bushels, which is 20 million bushels more than what we expected, it's going to be balanced off quite a bit by a lower production number in South America. The Argentine soybean number came in at 46.5 million metric tons. That's 1.5 million tons less than last month. And of course, the Brazilian soybean number was lowered to 139 million metric tons when USDA had it at 144 million metric tons the previous month. So world stocks are predicted to go down, and that would be the underlying bullishness in this whole report. What was most notable for wheat in this report was that it still hasn't gotten a break. We saw the U.S. quarterly stocks about 39 million bushels less than what we expected, but that was balanced off by final winter wheat seedings of about 140,000 acres more than what we had expected, and that came in at 34.39 million acres. Soft red wheat is notable because that's Michigan's crop, came in at 7 million bushels planted when the average trade guess was only 6.5 million bushels. So there's 500,000 bushels, 500,000 acres of soft red wheat planted more than what we expected. Now, that's not the case in Michigan because Michigan's wheat crop was devastated by late plantings, wet seedings, and so on and so forth, and we will not see that here. And then, of course, the world stocks on wheat actually was raised about 30 million bushels as well. So they really didn't get any help in the wheat here, and wheat values look like they'll probably continue to fade. Those who do have wheat in the field would likely see a better basis come harvest. Now, even though our Chicago Board of Trade price could be lower because of overall wheat stocks in the U.S. and world higher, soft red's going to be in tight supply. Chicago soft red futures could trade higher, but we've lost quite a bit of value in the last several weeks, and it still looks like that value points lower. But when it gets right down to harvest period, and when buyers scramble to look for supply, the only way they're going to get that if futures prices don't go higher is to get a much better basis than where we are today. So I would expect harvest time basis to be significantly higher than where we're bid today, and probably historically high. Well, right now, spot corn and soybean values look to me like we could be a little firmer. I would tend to think that we could trade back toward contract highs in March corn and March soybeans. December corn and November soybeans are a totally different animal. December corn has been flat at around 550, and we haven't been able to break out of that range. And soybeans have been in the 1250 range, and that looks like we could see some support in the November soybeans. The soybean corn ratio still favors corn, and we really look to me like we don't need to plant all that corn. I would expect either new crop corn values to fade a bit as it relates to new crop soybean values, which should probably gain a bit on corn between now and say the March 31st planting intentions report. On the corn side, one other concern is the fund length in corn. The managed money has been very, very long corn futures since last August, and they remain that, and they continue to build on that a little bit. So the most vulnerable contract that we're concerned about here would be the corn contract. If we get any reason to see a break in corn values, we could lose 50 cents in corn pretty quickly, when we don't think we would have that sort of liquidation over in the soybean market.